I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a brand new guest, a man who I've seen on the internet. He's a kind of a prolific writer and also an expert, particularly in precious metals. We have a new guest, and his name is John Embry. He is the Chief Investment Strategy. Of course, you see the background in John there at Sprott Asset Management. John Embry, thank you so much for joining us today on USA Watchdog.
It's my distinct pleasure, Greg.
I wanted to talk about some of your last articles in August and in June. And, you know, you wrote about and documented, and it's been well documented, but, you know, not more than a few years ago, people were, oh, well, you know, I don't know if it's really, manipulated. It's kind of, I don't know if it is manipulated. You know, people who thought that were on the fringe. They were wearing tinfoil hats. Well, even people like Jim Rickards, who wrote The Death of Money, his latest best-selling book, and, Currency Wars, and other people say, look, come on, it's manipulated. You just wrote a couple of articles, and you saw how they had $44 million in fines at one of the banks overseas. I think it was, what is it? Was it Deutsche Bank?
Yes.
No, it was Barclays. Barclays Bank had a 44. Yeah, you know. And then you had the German regulators talking about, how BaFin, how the top head of BaFin saying it could be worse than LIBOR, which is, hundreds of trillions of dollars in interest rate rigging. And I want to get to past the whether or not it's rigged or not, because I think you have laid out your case, as in many other people, a lot of people have laid out their case. The market's 100% rigged. I want to kind of get to the end game, and what it is that's going to cause the end game. We've had Eric Sprott on here saying that they're running on fumes in terms of gold and silver. And I want to talk about silver here too. But where they have to have the metal to rig it. Where is the end game in your estimation? Where are we headed?
Well, I think we're very close now, Greg, in the sense that the physical supplies of both gold and silver are being diminished at a fast clip. I just saw that Indian imports were up 176% in the latest month. And it's all
gold or silver?
This is gold, sorry.
Yeah.
And this basically suggests that all this gold and silver is headed from west to east, and I think this is a very, very disturbing development for all of us who live in the West. The timing of it remains imprecise. I think because the takedown in the paper markets are so aggressive at this point that there's something going on behind the curtain which suggests to me that things are getting very close to reaching a head. And we won't know till it happens, but I think you've got to be on the right side of the trade the moment it happens. You can't be late.
Been a lot of pressure on gold and silver. I mean, silver dipped below 19 bucks. Gold is in the 12s and been going up a little bit, down, up a little bit, down, up a little bit, up a little bit. What do you suspect is going on with the prices? I mean, here we have all these wars in the Middle East, and we have nothing settled in Ukraine, and yet gold should be the flight to safety asset, but it doesn't seem like that's what's happening, at least in the COMEX and the LBMA.
Well, it's counterintuitive price action, and it's working because basically I've never seen more negative sentiment in the sector at a time when both gold and silver are remarkably underpriced. This is probably a strong statement, but I'm prone to make them. I think gold and silver are as cheap today as they've been at any time in their histories in relation to the amount of money that's out there, the amount of credit, the cost of digging it out of the ground, et cetera, et cetera. And yet nobody's interested in buying it. And to me, this is one of the great opportunities of all time, but the timing of it remains imprecise.
What do you say to the folks? Because you guys had one heck of a decade of track record. I'm talking about Sprott Asset Management. You guys were hitting it out of the park every year, year after year. And then, in 2011, it seemed like the price, even people like Paul Craig Roberts, a former assistant Treasury Secretary, father of Reaganomics, had just laid out, him and Dave Kranzler, I think, just laid out how they're dumping the price, and they're dumping a fourth of the entire mining production in 5 minutes onto the market. And I don't know if that's exactly, but dumping a ton of naked shorts, equivalent to a lot of the annual mining production that they just didn't have. Well, what, in your estimation, is that what got some of the guys picking gold and silver to go higher? Is that because the debt's going higher? Is that why you missed it so much? Did you not see the manipulation coming which is off the charts.
This is an excellent question, Greg. I think what we missed, and I've been thinking about it a lot, is that we didn't fully understand the extent of the new financial innovation. I mean, what you have today between derivatives, high-frequency trading, algorithm programs, and what have you, you can do amazing damage to markets and put them almost anywhere you want. And the only thing that can stop something in the case of gold and silver is there is a physical context to it. And it's our opinion that the physical supply of gold and silver is reaching critically low levels. And when that day has arrived, I think the pricing mechanism will turn over to the physical market away from the paper market. And the people that are short the paper market are going to have a religious experience.
Do you think that the market turns up this year? I had Harvey Organ on. I think you know who he is.
I know Harvey, sure.
He's a private individual, but a smart guy. Been running a blog since 1999. He is a great student of the physical markets, and he thinks that it'll come unglued this year because of China. Their market they're going to run out of silver this year, and after they run out of silver, people will say, "Where's the gold?" What do you think about something big happening before the end of 2014? Other people say Martin Armstrong had him on and says, "I know gold's going to go down to possibly 600, maybe 800 or 900, and it's not going to turn back up until 2015." I pretty know where you are, but what's going to happen? What do you think is going to happen?
Well, I take exception to these people that think that gold is going to 600, 900. I mean, the gold companies themselves today, if they fell to those levels, there would be no more gold mining activity. So I take that with a grain of salt. And basically, the price of gold doesn't go down in that sense. What you're saying is that the price of paper currency is going up. And I mean, in the context of today where they're printing money hand over fist globally, I mean, how can that be? So I take exception to that. But the timing of when it breaks away in the upside is indeterminate. I have been on record for some time as thinking it would happen before year end. And like a lot of people were talking optimistically about September because historically it's the best month for returns in gold. And besides, people were coming back and there'd be more attention paid to it. And naturally, the paper shorts came out and they crushed the market at the beginning of September. But I think it will pass. Whether it happens before the year end is I don't know. But the key thing is you must own it. You must own physical outside of the banking system. And I think the stocks are remarkably cheap. And when the gold and silver moves up sharply, which will at some point in the not too distant future, the explosion in the price of the gold and silver shares will be astounding.
My question also is, don't the powers that be know what, I mean, there's smart people out there doing this. They're not stupid. Don't they know?
I totally agree.
Don't they know this is going to ricochet back up? Are the people suppressing it? Are they going to be the guys on the other side driving it back up? What are the powers that be? What is their mindset? You think, because you guys run on an $8 billion fund? I mean, you're heavily involved in this market. What do you think they're thinking, and what do you think their end game is?
Well, that's an excellent question because I think there's been a lot of papers written that show there's an empirical relationship between gold and real interest rates. And if the gold price were to truly reflect what is going on in monetary policy today, I think real interest rates would rise quite significantly. And given the amount of debt that's polluting the world system and the banking system, this would put paid to the banking system and most particularly the derivatives that are all through the banking system. So to me, this is the end game, and that's why it's so vicious in terms of the paper suppression right now, because basically when this turns, it's going to change a lot of things.
Go ahead.
That's basically it. So, I mean, I think that's why they're being so aggressive in maintaining this pressure on the gold and silver price. Silver's remarkable. I mean, I don't think you can dig it out of a pure silver market mine now for less than $25 an ounce, and it trades at $18.60. It's not like gold. There's not a huge above ground inventory, and 75% of silver is consumed in growing industrial uses. I'm amazed that the silver prices remained this low this long, but it's part of the suppression because it's the most vulnerable part of it from the suppressor's point of view.
And do you think the suppression game is more intense now than it was, say, in 2013 or 2012 or 11? That's when it really took fire. 11, 12, 13. People write me all the time and say, they just feel totally demoralized, and I guess that's part of the game.
That is totally part of the game, Greg. And I sort of have been following this subject closely for 15 years. I got involved with it because I used to manage a gold fund. And the gold price didn't make sense to me, so I started digging around, and I found all sorts of chicanery. And I think that at one point when they drove the gold price down to 252, and there was the London auction when the Bank of England sold their gold in a totally transparent way to get the lowest possible price, that was a pretty bad period. But I would say right now in this, I've never seen it any more intense than it is right now in the paper pressure in the paper market, which indicates to me that we're near the end and there's something seriously wrong in the system.
Harvey Organ also brought out the fact that, the people who are the longs in the silver market, he says there's also a bunch of longs in the silver market. He thinks that's proxies of the Chinese. And they think when their market is sold out and they have a couple of 2.9 million ounces of silver left, and they're using a couple of million ounces a month for all kinds of, the manufacturing, cell phones, solar panels, you name it. He says that they will execute their long positions and demand delivery over at COMEX and game, set, match, and everything blows sky high. What do you think about that scenario that Harvey Organ put out?
But I'm well aware of it because he's not the only person that's saying that. I suspect they may well be right, but we don't know. But what I will say is whoever this long is it may be a series of longs, or it is one long, in the silver market, they are resolute. Like generally when you see this much pressure on the price, the longs give up and sell and the shorts cover and make a big profit. But the longs have remained resolute, and basically the open interest is near record levels, and the price is near recent lows. So this is highly unusual, and Harvey could well be right. And if he is right, our predictions, Eric Sprout and I have believed for some time that silver is going to be a $100 number sooner rather than later. That would certainly be supportive of that kind of price action.
Why do you suppose that gold and silver have not gone up with all this talk of destroying ISIS? Of course, the president, he says one thing, he's going to, disable and ultimately destroy. I think it was ultimately destroy was his exact words. And then, Joe Biden, we're going to follow him to the gates of hell. And then, then it comes out that, not so much, not going to be shock and awe. And no boots on the ground, of course, no boots on the ground. It's like, and plus, then there's the whole idea where it looks like the U.S. armed, at least in part, ISIS, Al-Qaeda, it just looks very mixed up, screwed up. And it just seems to me people would want to run to, no matter what you think it is, people would run to gold and silver. Why don't you think that's happening?
That's an interesting observation, Greg, because in my experience over the last 15 years, whenever there's an international crisis of any dimension, gold and silver are suppressed more violently because they do not want the public to make that connection. And so this has been I think this is one of the reasons why the suppression is so aggressive here, because as you correctly pointed out, there are so many issues. It's just not the geopolitical issue. It is the financial issue. It is the economic issue. There's exogenous factors developing now like Ebola, which scares the living devil out of me, and climate change where you've got the California drought. There's a zillion things going wrong. The U.S. dollar to me is extremely vulnerable in this circumstance, and it is the antithesis of gold. So gold has to be held back, and silver as a result of being connected at the hip to gold. So this is the battle. I call this the end game, and this is the battle to the finish, and gold and silver will win, and we're just determining how long it's going to take.
Well, when you say you have to have assets outside the banking system, why? What do you envision?
Well, I think that there's been evidence already that people that have gold in a allocated account in a bank, and in several instances they've gone to get their gold, and the gold's not there. So to me, it's much safer to have your gold in a private vault or in your own possession, and not run the risk of somebody taking your gold and lending it out unbeknownst to you.
Do you think we could get into a Mad Max type scenario? A complete financial meltdown at some point, maybe not before the end of the year, maybe sometime in 2015, maybe some suitcase nuke goes off somewhere. After all, there were, more than 1,000 unaccounted for when the Soviet Union broke up. Do you think we could get into a real difficult time in the economy that people aren't counting on?
Greg, this is my greatest fear. Quite frankly, I find the complacency today about the whole situation, and I think it's based largely on, markets are acting right, stocks and bonds are up. People want to believe things are going to be all right, and they're not going to be all right. And quite frankly, my greatest concern is I'm right, because I think the societal impact of my being right and sort of seeing something come unstuck in a big way could be very unpleasant. And I've had the great advantage of growing up in one of the greatest periods in history. Anybody that was born sort of before or after the Second World War and had the opportunity growing up in North America has had a life that is to be, really envied. And I'm afraid those days are very close to being behind us. So that, what you just said, is my greatest fear today. Markets are one thing, but social unrest is another.
What puts those days behind us, though? What does the financial and geopolitical landscape look like if you're saying there is going to be a big reset, adjustment, crash, whatever? Martin Armstrong incidentally says there will be a bigger crash than the last one. He does say that. He also says that gold will go up, just not at this point. But a lot of people, no matter which side of the aisle you are and where do you think gold is going to go, almost everybody universally says there's a crash coming. It's going to be bigger than 2008. What say you?
I don't think there's any question that there's a crash coming. It's going to be bigger than 2008. And the reason I would say that is nothing has been corrected in the interim. I mean, the amount of debt in the world, the amount of derivatives have risen. And as a result, when the next crash comes, and it will come, all the ammunition has been fired. I mean, the last time the sovereigns bailed out the banks, but now the sovereigns are technically bankrupt. So you can't do that again. And interest rates can't really go any lower. I guess you could have negative interest rates. It remains amazing to me that anybody would hold this garbage at the kind of interest rates you're getting, but they do. But so, that when the next one comes, I think it will be worse, and there will be less antidotes to fight it off.
They're talking about raising interest rates. Ambrose Evan Pritchard was talking about how that he thinks, and a few weeks ago, saying that the Fed is going to end up raising interest rates, and it's not going to. Gold and silver aren't going to like that very much, and I don't think the Chinese are going to like that very much. I mean,
well, the fact is that gold and silver haven't liked it very much when the interest rates have been dropped to zero. So I would take issue with that. I think that if they raised interest rates, and I don't think they will willingly, I think the victims will be the bonds and the stocks. They're the things that are particularly elevated today because of the low interest rates and the monetization of everything. And to sort of hide this from the public, gold and silver, which are the canaries in the coal mine, have been suppressed. And the financial assets have elevated to levels which make no sense whatsoever. They're grotesquely overvalued.
Well, am I getting this wrong? Because I'm just a reporter. But if they start raising interest rates, and I'm China, I'm holding on to $1 trillion worth of bonds, and the rest of the world's holding on to trillions and trillions of dollars of our treasury debt, isn't anybody going to sell?
Well, that's interesting, because I think the Chinese down deep know they're going to lose some money on their American paper. And that's one reason why they've been tearing all over the world, buying every physical thing they can get their hands on. I mean, I think they have the largest stash of gold in the world by now by a large margin, even though they don't report it. And I think they've been buying up everything in Africa they can get their hands on. And it's a matter, they're going to have to take a loss. I think they realize that. But when you think about it, when it's all over, they're going to have all the gold. They're going to have a totally modern infrastructure. And we're going to be bankrupt with a crumbling infrastructure. So there's going to be no big winner, but I think the winners will be in the East, not in the West.
But their last gasp, when they know, Rob Kirby came on and said that this is going to end when the Chinese no longer can get any gold.
That is absolutely right. I know Rob well, and I have an enormous regard for him, and he's absolutely right. I think that people say, well, how come the price keeps going down? Yeah, I said, well, the Chinese are trying to get every single ounce at a good price they can. And when they can't get any more, then the game is going to change and the price will be marked up in the physical market.
But at that point, wouldn't the Chinese say, okay, let's get what we can out of the treasury bonds. We don't care about America. Let's sell.
I think there's a very strong probability of that. I mean, quite frankly, anybody owning treasury bonds and bills today, I think, is running an enormous risk. And if I'm correct in what I say, I think when this all breaks, you're going to see the biggest wealth transfer in the history of mankind.
And the other thing I wanted to ask you about, because you're chief investment strategist, you have to have all the stuff, and I don't know the answer. And it just hit me when I was thinking about doing the interview. I wrote up a bunch of notes down and questions for you. And one of the things I said, well, he must have a strategy for, we're pushing this war in Ukraine, which is bizarre. We started more sanctions after a ceasefire started, which is kind of crazy. We're, going after ISIS, which some people say, the U.S. funded. And now we're kind of teaming up with Iran through the back channels. This is a country on our terror list. The long and short of it, wouldn't that China or Russia or somebody like that say, we want to inhibit the ability of the United States to conduct war. Let's crash their treasury market and sell, sell, sell. Couldn't somebody do that as a financial act of war to limit the United States' ability to carry on their military operations and fund them?
That is an excellent observation, because right now I would submit that the U.S. and their banks and what have you are suppressing the oil, gold, and silver prices to try to cripple Russia and some of their other enemies. And I think, ironically, that they are more vulnerable, because if the adversaries, say the Chinese particularly, and the Russians to a lesser extent, were to decide to attack the U.S. Treasury market, that could really bring chaos into the U.S. system. And you just pointed out something that could very well happen. I think the people that are running the strategy in the United States are being very short-sighted here, and I'm baffled at their whole Ukraine strategy, to be quite honest. Do
you think there's financial war going on right now?
Yeah, I do believe there is, yes. I think basically nobody wants to fire any bullets because it could lead to a nuclear event. And it's much easier at this point to conduct financial war, and I believe that's exactly what's going on.
Do you think that's why the Pope said that what we have is really World War III done, and this is not an exact quote, but these are his words, done in a piecemeal type way? We really have World War III, piecemeal World War III, is what the Pope said.
Yeah, I think that's an interesting observation. I think it's being done financially and in sort of little bites on the physical side, but nobody really wants to commit too strongly because, of the implications. Albert Einstein many years ago said, I know not with what weapons the Third World War will be fought, but the Fourth World War will be fought with sticks and stones. And I think people should think about that, because you're playing with fire when you get into this sort of activity.
I'm going to get you out on a limb here, and I'm not going to saw you off, though, but what do you think gold and silver will be at the end of the year?
I've said gold could be 2,000, but as we get closer to the end of the year, and it's being suppressed as violently it is, I don't know. But I will say that when it moves, and this is the big thing, when it breaks away from these paper constraints, I think 2,500 is an easy target. Whether it happens in the next 4 months or the next 10 months, to me, is somewhat immaterial. The key thing is, if you don't own any, you'd better own some right now, because even if it goes lower, if you're wrong and it doesn't go lower and it starts to take off on you, you may not be able to get any.
And silver, I know you guys are big silver people too, so something for the silver investors out there, what do they think? What do you think about that?
Well, I think that, as you're well aware, Greg, the gold-silver ratio is a really interesting one that's been all over the map in the last 50 years. It's been as high as 100 to 1 gold. An ounce of gold's been worth 100 times an ounce of silver. It's been down as low as 15 to 1. I think when this gets underway and both gold and silver start rocketing to the upside, the gold-silver ratio, which is currently in the north of 60 to 1, is probably going to fall in stages to 30 to 1 and maybe as low as 15 to 1. So as much as I love gold, fortunes are going to be made in silver and silver shares.
And final question, what's going to cause this rocketing up? Are they just going to one day at the COMEX say, we're out, we're not going to deliver, we're going to pay in cash? Or LBMA, because that's an association, not a real market, like COMEX is. It's more of an association. So what's going to rocket it up?
I think there's a lot of potentials. As you know, the Shanghai Exchange is going to go into full overdrive in the next 3 or 4 weeks, and that's going to be more a physically based market. And that's going to put stress on COMEX and LBMA. I don't think they will declare force majeure. I think they'll be forced into it by somebody, calling for delivery, which they can't deliver. There's an open interest in silver now in the COMEX of something like 850 million ounces. There's 60 million in the category that's available for delivery. This is madness. Like, I don't know why anybody would own a long there on that premise, because you're not going to get silver. You may get some, but in the end, you're going to be settled for paper. So I think people should be working outside of the COMEX and trying to lay their hands on all the physical gold and silver they can get in this environment, because the pricing will not remain depressed for that much longer.
But you think that's what's going to be a non-delivery, a paid in
I think
paper?
that somebody's going to ask for the silver or gold at some point, and there's going to be a failure, and that could well trigger the whole mess.
John Embry, the Chief Investment Strategist at Sprott Asset Management. Thank you, John, for coming to us and on USA Watchdog and giving us your analysis of the gold and silver market. Thank you very much.
Ray, it was my pleasure, I assure you.